I'm Judy Shaw for NYSE Floor Talk. Joining me today is Paul Srivorakul. He is the Group Chief Executive Officer at aCommerce. Hi, Paul. It's great to see you.
Great to be here, and thanks for the opportunity.
Great to have you on. Now, quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Now, Paul, tell us about aCommerce.
So aCommerce, we are a homegrown Southeast Asia technology company. And we are an e-commerce enabler, and our customers are brands, Fortune 500, such as L'Oreal, Unilever, Adidas, Samsung. In short, we act as a partner to take care of the whole journey of selling goods online on an end-to-end basis across all online channels on our e-commerce enablement platform. And we help brands sell on marketplaces and direct to consumers, such as their own brand websites, as well as social platforms. We cannot do everything ourselves. So yes, we do outsource some of the non-core operations like fulfillment and logistics. And what brands really pay us for is access to our technology platform, which really integrates with the brand's existing software and ERP systems. And we behave like a Bloomberg terminal for e-commerce for brands, and really enabling them in measuring demand forecasting, demand generation, everything from marketing, inventory, logistics, fulfillment, and channel data and analytics. And an analogy we like to use is we are our arms dealer to the Southeast Asia e-commerce space, where we can ride that same kind of growth as B2C, but with much more modest levels of cash burn and benefit from everyone really investing into to bring consumers online. And our revenues, full year for 2020 was approximately around 235 million US, and we're growing at a sustainable level of around 60% annually. And we are a bit different than the other tech companies across the region, specific more the e-commerce, as we are EBITDA profitable and have more of a focus on, I guess, the protocols, the long-run sustainability. And again, for us, we've been, we're going to be around for decades, and not just for as long as the markets are liquid or funding is cheap and easy.
All right, now, Paul, how does the Southeast Asia region differ to China in terms of e-commerce, such as the landscape, approach of consumers, and also brands looking to increase market share?
Sure. Southeast Asia is actually very different to China. I mean, China is, one relatively homogeneous region with, the most advanced kind of digital infrastructure in the world. And highest e-commerce percentage of total retail. I mean, e-commerce, e-consultancy, actually, a recent study pegs it around over 50% by the end of 2021 of total retail. It's got a lot of digital payments, but also one marketplace that's being really the runaway leader, much like Amazon in the US. And so given the kind of long run unit economics, both for B2C model, it's compelling. But which is facilitated really companies to raise large amounts of capital before being proven. Southeast Asia e-commerce is kind of a huge blue ocean opportunity, and it's only going one way, which is, but it is different, very different from China. It's not one region; it's a very fragmented, collection of six more countries, but we focus on 6 core countries, and each with their own language, customs, political, regulatory, legal, licensing framework, really in different unit economics for our B2C platforms. So we're also, very far away from having that one dominant B2C platform and or marketplace, and Southeast Asia, has a multitude of them. It's very fragmented, and you're seeing really, channels such as social, really exploding. Similar to Pinduoduo in China. So as a result, brands and anyone looking to sell online need much more assistance to navigate all the, the issues and achieve like a true omni-channel distribution, especially if they want to be pan-regional and not just in one ASEAN country. So we feel ASEAN is, it's in perfect storm for our business model to really thrive.
Okay, do you think we'll see consolidation of the Southeast Asian B2C players and marketplaces, or will they be coming to the public market soon? And what will the impact be on the sector?
So Southeast Asia is really, it's a highly strategic frontier market, right? And it's seen a wave of tens of billions of US dollars of investments in the last 5 years. It's a great, this is great for our region and also great for our business. As a result, it's really there's a proliferation of B2C and digital infrastructure models, most with strategic backing and large stakeholders with lots of funds. long term, there's going to be some consolidation, but in the near medium term, still incredibly well-funded companies expanding aggressively and competing. Of course, with easy and strategic backers, it makes consolidation talks a little harder to consummate. Some of these players also have really indirect kind of political backing to add another kind of layer of complexity. So lastly, you'd also have new kind of nascent distribution models emerging, like social, which will be, as I said, may leapfrog, similar to what we see in China with Pinduoduo. So really kind of in short, I guess, despite lots of kind of the talk and expectations, a large round of consolidation, what makes sense might still be some time away.
Okay, and then finally, Paul, we know what the consumer impact of COVID has been. How has the approach of brands to your region changed with COVID?
So firstly, we have a platform called Brand IQ, where we track a lot of the consumer and the brand data across all of these different channels. And it's a kind of a proprietary analytics platform that we have. And we've seen a very kind of interesting cohorts. And, when you see that a lot of first kind of new customers come online during lockdowns out of the necessity, but also the fact that most have stayed online, we're seeing a real significant increase in repeat buying. And for brands, it has been a big game changer, right? Southeast Asia now much higher on their strategic focus. They're less worried about cannibalization of offline sales, and really kind of rushing to online, given that they've been so impacted. And eventually the consumer shift online has been brought forward, 5-6 years. So product sectors have been really negatively impacted by COVID, as in fashion and luxury. And online is taking a much larger slice of that smaller pie. For us, we saw a huge increase in FMCG and in healthcare, obviously, but for also prestige goods, fashion, they're up as much as 300% on the year in 2020. So, we see a lot of brands really prioritizing direct-to-consumer brand.com and web store, and they not just want to rely on the marketplaces, but also see an importance of access to data and more consumer engagement for efficient marketing and consumer loyalty. So this has been really great for us, in that, somewhat fortunate, as we had made a lot of investment ahead of time waiting for this opportunity to happen.
All right, Paul, it's been great to talk with you. Thanks for joining me on NYSE Floor Talk.
Thank you.